Assuming the individual is terminated from employment, they have three options. First, they can take a plan distribution. However, since 401k plan monies are considered tax qualified monies, meaning they haven't been taxed once they've been contributed to the 401k plan, then there's a possible early withdrawal penalty as well as taxation that's involved in taking a plan distribution. That taxation is 20% federal right off the top. And at the time the person files their taxes in the following year, then there is a 10% early withdrawal penalty, and then state taxes of approximately 10% would apply. The second option they have is to initiate a rollover into an individual retirement account, or as we call it, an IRA, and you can maintain the tax qualified status of those dollars or the funds in the 401k plan. And thirdly, the individual can choose to leave the assets with the 401k plan provider and then draw down funds as they need to. US expats may close their 401k plan account if they'd like. However, this is not a popular choice. The tendency is for people to leave their money in the 401k plan once they do leave the United States. However, there are certain limitations that we're seeing with the 401k plan providers and what they're doing with these expat accounts. So the situation is the US disclosures are applicable to folks living in the United States only. So if you have a 401k account, the investment disclosures that go out, anything related to the 401k would go to the individual. But once they move abroad, those disclosures no longer meet the regulatory requirements of someone that is living abroad. And so these 401k providers are then starting to limit an individual's access to their account. They can't sit there and initiate transactions and move money around. They can go ahead, though. They will allow them to withdraw monies as they need to, but they cannot transfer between funds. They cannot initiate new transactions. So as a result, it becomes very difficult to manage a 401k account if you are living abroad. The simple answer for that is no. Of course, that can't happen mainly because of the tax qualified status here in the United States. And of course, every country out there has a similar program, but there's no reciprocity. You cannot transfer a US pension to England or anywhere else.
The benefit of consulting with a firm like Alexander Beard is that we have 35 years or more experience in looking after globally mobile expatriates. And during that time, we've come across a range of situations where professionals such as lawyers and accountants don't necessarily have the experience in terms of knowing what alternatives are available in which countries. My colleague touched upon the fact that there's no reciprocity in the United States for incoming pension transfers or outgoing pension transfers. But that doesn't mean that opportunities don't exist to provide a client with an alternative that's both tax efficient and allows the assets to be well managed. And again, the most important thing, whoever you deal with, is to deal with a company that is fully regulated in whatever countries you're dealing with. In other words, regulated both in America and regulated, for example, in the UK, if we're talking to a USA citizen here, or in Europe, or in Australia, or whichever part of the world the US citizen is. It's very important to have a locally regulated license, so you know that the people dealing with it on the ground, so to speak, are aware of all the options locally. There were a period of years up to 2 or 3 years ago where advice was given in America to British expats, for example, which was product sales and commission driven. And the advice turned out to be wrong because it broke the rules on taxation of pensions in terms of cross-border and respecting the tax treaties of countries. And that happens if you don't go to somebody who knows what they're doing. And just to one final point on that is, we work with a number of qualified cross-border tax advisors. So whereas our advice is on pensions and the underlying investments, if we are unsure, we will go out and talk to one of our tax advisors to get independent advice on that particular aspect of the situation. And again, if you're dealing with a company that doesn't have that expertise and they're just product selling, you're not going to get that sort of service.